A lot of my clients right now are asking Terrence, when is this market going to bust? Because I want to wait to buy my house till the prices go down. I'm here to tell you they might not go down. I'm Terrence with Boykin Realty, brokered by Keller Williams. I'm here today with Jeff Williams, and we're going to talk a little bit about lending and should you wait or should you purchase now? Jeff, tell us a little bit about yourself and maybe just one or two things that separates you from other lenders.
Sure. Hey, yeah, thanks for having me, Terrence. I am Jeff Williams with Nations Lending, 23-year mortgage veteran here, and so experience counts in a lot of businesses. I'd say what really separates me, other than the experience, is I really invest in myself, educating, staying on top of the markets, as well as investing in tools that help my clients, hopefully to know when to lock in, know should I wait, do we think the market's going to crash, what's the forecast. So there are times, as a loan officer, you should ask the customer what your intentions are, how long you think you're going to be here. What are your future plans? You having kids, you're going to upsize, you're going to downsize, right? So recent transaction I did, customers moving from another state, they have a home they'll sell within the next 6 to 8 months. Their intentions are to sell to pay this house off in cash at that time. So when it came time to lock them in, I told them what I can offer us the lowest rate. I also told them if we go with this rate, I can pay $5,000 of your closing costs, which is all of your cost. It's a pretty large loan. And so I did the total of payments with the higher rate and the higher payment. I said, even if you keep it for 12 months, here's the total you pay. If you take the lower rate, the payments for 12 months, it's like a $700 difference that they're going to pay with a higher rate, but they save $5,000 in closing costs, net $4,300 win for that client.
So
right?
That says a lot right there, that it's not always the lowest interest rate, and you need a lender that knows the market and can save you money. So that's a great point right there, Jeff. One of the other things you mentioned in your intro was locking in on rates. I've noticed we've had some jumps. It's been up and down here lately. Do you recommend locking in?
In the short term, I would say definitely lock in. You can always have a day where rates improve slightly, but I think the trend is definitely higher. You can watch what the bond market doing, listen to the federal government saying we're raising rates aggressively, right? So definitely lock it at this time.
Got it. And to ask my original question, I've got a lot of buyers right now that they're thinking about 2008, 2009 and a market crash. And I think here, I just looked at a chart today since 2019 in the triangle. On average, homes have increased just over $100,000 in value. Is it wise to wait, or should a person buy now? Are they going to lose out if they wait? And how can you show that to a client?
Yeah, great question. And no one has the magical answer, that crystal ball, right? But I will say this is in my opinion, it's way different than 2008. 2008 was a housing crisis. Now, as you are well aware, we have a shortage of housing. So what I did, before we got on the call, I put up an average house, which in this market, 400,000 range, right? Not the higher end. So today, if it's worth 432 is this example, waiting 6 months, it would be worth $456,932 in 6 months. And the projected rate would be about a quarter higher than they are now, right? So you've lost $23,000, $24,000 in equity that you would have had. Not to mention a higher payment. Well, it's higher payment because you got a larger loan and you got a higher interest rate. 1 year, it's projected to be $470,681 from 432 today. So you just lost $50,000 by waiting 1 year.
That's a big statement right there, because I looked at charts earlier today, and for the last 10 years, triangle area property values have gone up every year, and they took a huge jump in the last year and a half. So that is a big thing to be able to show your clients how much they will lose in equity if they don't buy now.
Yeah, and to your point, because you're exactly right, how much we've gone up. That's not what these numbers are. These are historical averages. So that's not even saying it's going to go up 20%. We're not using those numbers because that's not going to continue, I don't think, right? But if you go back to historical numbers, you still lost $50,000 in 1 year on the median price of Raleigh right now. So it's huge.
Yeah, that's great info, Jeff. You guys out there, if you're in the market to buy a house and you'd like to know, does this make sense for me to buy now or should I wait? Jeff would be a great person for you to reach out to, so you could send him maybe some houses that you're looking at, and he can give you the full picture. What you might gain in equity buying now versus later, and how he could possibly use the equity you have in your home right now to help you purchase that next house. Would that be correct, Jeff?
That'd be fantastic.
Awesome. What's the best way for them to get in contact with you?
Yeah, the best way is my cell phone, 919-602-6673.
Okay.
Also got email. It's my name, jeff.williams@nationslending.com.
Thank you for saying that slowly. I hope this was helpful for you guys. Again, if you have any questions, please reach out to Jeff. He's the one to help you. Thanks for coming on today, Jeff.
Thanks, Terrence. I appreciate it.
All right. See you.